What's up, traders? So today I'm going to show you how I run the wheel strategy on SoFi to make thousands of dollars per week, especially since SoFi is reaching a critical level. And we'll also discuss where the market stands currently. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I am blessed to bring in full-time income directly from the stock market. Now, go ahead and do me a huge favor and go ahead and smash that like button. That just helps push the video out to more people. And do remember that this is not financial advice, nor is it a recommendation to buy, sell, or hold any equities or options contracts. All trading comes with risk. Now, y'all know it would not be my channel if I did not start off with a word from God. And today's word comes from Luke 14:28. And it says, suppose one of you wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it? And this directly talks about people having a lack of preparation. With anything you do, you should prepare for it and come in with a plan. And that's the exact same thing when it comes to trading. The people that lose money are usually the people who do not go in with a plan. You should have a plan on why you're entering a trade, and you should have a plan and a process of how you exit a trade. And when you use those two things, you will undoubtedly be more successful when it comes to trading. But speaking of people who are absolutely following the process, I have to shout out members of the Trader Freedom community. And so we have Jared here. He's a brand new member, and he is starting in our 0 DTE trading community. And he's just now getting his feet wet, $250 on the first day. And it's going to be up from there. So shout out to you, Jared. And then we have Justin here, who says 6 green days in a row, close one early for a small loss. Thank you to this awesome community. $11,445 in a span of 5 days. All right. And then he screenshot, of course, some of his gains here. So shout out to you, Justin. And then we have another 0 DTE trader who says close remaining contracts, profit of $1,500 for the day. So shout out to you. And for everybody else, I've received dozens and dozens of emails and messages under the video comments asking for a Black Friday special. And I'm excited to announce that I am offering one. If you click the first link down in the description below and fill out the form, you will be emailed a discount code to use to get access to the Trader Freedom community. And it is active now. So you can get access right now. And obviously this deal will end soon, so make sure you take advantage of it. You'll see my trades, you'll get access to the course, you'll have access to ask me questions and a ton of other very well-experienced traders. And you'll also be within a community of people who are striving for the exact same goal. And so this is the one and only deal that I'll be running for the entire year. And so if you've been considering joining us, then right now is the time. Or if you just want to be nosy and you want to wonder, well, how much is he offering? Well, the link is below. Fill out the form and you'll find out. All right, but let's get down to business. Well, first off, looking at the market, here we have SPY pulled up. And yesterday was a very, very interesting day. All right, so we had amazing earnings from NVDA and the jobs report came in slightly better than expected. And we still had a huge sell-off. And on top of those two things, we also had Walmart's earnings that day, and they did amazing. And as one of the largest retailers in the world, if Walmart is doing well, that typically means the US consumer is doing very well as well. And so it was pretty surprising to see the market sell off the way that it did. And Thursday was actually the 4th largest gain to be wiped out intraday in the last 5 years. So it was a pretty big deal. But on Friday, we did have a nice little recovery, went up 1%. But I believe we could continue to see this high volatility environment until after December 16th, when we get the next set of jobs data. Because what the market hates is uncertainty. And so since the government was shut down for so long, there is so much data that we are missing. And as data comes out more and more and more, it will ease the uncertainty. All right, but December 16th is when the next jobs report comes out. And so that will be very big as far as where we go from here. But listen, what you don't want to do is sit around and not take advantage of the opportunities that are being given. Because if we come over here and we look at the VIX levels, we can see that it's currently at 23, but that's after it went down quite considerably today because we had a huge green day. Just yesterday, we had reached all the way up to 28. And so we were well into that extreme fear level. And if you are an option seller, this is not the time to sit on your hands and do nothing. This is where the big money is made. The famous Warren Buffett saying, be greedy when others are fearful, is not just advantageous when it comes to buying shares. That works out with a lot of different option strategies as well. Because when we reach these levels, it always comes back down. The average VIX level for the last 5 years is 19. And over those last 5 years, that also included the tariff drama that happened just in March and April. And so this is an opportunity that you want to take advantage of. And listen, I don't know why people get so fearful of a discount. Stocks are literally the only thing in the entire world where when we see cheaper prices, we try to run away. We're all excited right now about Black Friday deals. Why? Because we love paying cheaper prices for things. However, when it comes to stocks, people want to run away from the sale. And that is absolutely not what you should do. And so one thing that I'm doing to take advantage of all of this increased volatility is I am running the wheel strategy on SoFi. Now, if you're not familiar with the wheel strategy is simply when you sell a put and sell a call at two separate times. So the first step in the wheel strategy is to sell a put. And when you sell a put, you're just agreeing to buy the shares at a cheaper price. And for making that agreement, you get paid money up front, which is called the premium. And you can do this step over and over and over again. But then eventually the stock price will drop and then you'll be assigned the shares, which just means you are buying the shares. And so once that step has happened, we'll come down and we'll sell a covered call. And when we sell a covered call, that is just us agreeing to sell those shares that we already have. And of course, you guessed it, for this step, we also get paid money up front. And we can again do this step over and over and over again until the stock price rises above our strike and we are forced to sell the shares at the strike that we selected. And then once that happens, we are back to square zero and we can start doing the strategy over and over and over again. And that is why it's called the wheel. But one of my favorite stocks to do that on currently is SoFi. But now here we are in the Moomoo platform and I have SoFi's chart pulled up. And so obviously it's had an amazing year. It went from as low as $8.60 on April 7th to going all the way up to $32.73 just recently on November 12th. And this was after having amazing earnings. The company is growing rapidly, and there's not really anything to fundamentally not like about this company. All right. But of course, over the last week or so, it has had a sell-off along with the rest of the market. Well, with this, that just brings extra opportunity because it is at a very crucial level. We can see here that it has some support at $25, which it quite literally bounced off of today. All right, today it went as low as $23.52. And then it went right back up and finished the day at $25.19. Now, that's not to say that this level will hold, but for a short period of time, it could be a level of support. And then after the $25 mark, the next level of support will likely be this $20 level here. As we can see, that was a point of support there. And so knowing this information, let's go ahead and take a look at the options chain. Now, the first thing I need to do is select my expiration date. And typically when I am selling options, I always go within 45 days. And that doesn't mean I need to select 45 days. That just means it needs to be within. So we can select any of these days, 35, 28, 21. But let's go ahead and select this date that's 28 days out from now. Now, I want to look over here at the expected move. So the expected move is right here. It says plus or minus $3.71. And so that is the largest move that the options market currently has priced in for this stock by the specific date. So they're saying at maximum, SoFi would move up $3.71. And maximum, they will move down $3.71. And so if I'm just looking to solely collect the premium, then I'll probably want to be a little bit outside of that expected move. Now, if you're looking to buy the shares as well, and you really want to get assigned, which I actually kind of do, then you could be even more aggressive. Okay, now I have sold puts at $24 right now. And so I sort of hope that SoFi continues to go down and I'm assigned those shares and then it goes back up after. But for the time being, let's assume that you're really focused on just collecting the premium. And so at $3.71 for the expected move, I probably want to be around the $21 to $22 strike price. And that's amazing. If we look right over here, we can see on the seller's ROI that this $22 strike will pay us about 3.97%. So about 4% return on the money invested. And so that sounds good to me. We can sell this $22 strike and we'll get anywhere between $83 to $85 right here, right now. And now, again, all we're doing is agreeing to buy the shares if SoFi were to drop below $22. And so if SoFi stays above $22, then we just keep the money that we received and we go about our day. However, if the stock price were to drop, then we get assigned the shares, aka buy the shares at that $22 mark. All right, and that's no matter where the stock price is. So if it does drop down to, let's say, $20, then we're still forced to buy at $22 because that's what we agreed upon. And every contract is worth 100 shares. So make sure if this is the route that you're going, that you do have an account the size to buy 100 shares per contract of whatever stock that you're trading. And so if we go ahead and click this $22 strike, then from here we can select however many contracts we want. Let's say that I want to start off with 5. Now, typically for me, I like to kind of dollar cost average into a trade. And so let's say if I was planning on doing 15 contracts on SoFi total, then maybe I'll enter into 5 today, maybe 5 tomorrow, then 5 on another day. All right. And that allows me, as the price fluctuates, to actually pick different strike prices and possibly different expiration dates as well. But let's assume right now I'm just going to do the 5. And we can see that I'll make $420 for this entry alone right here, right now. and the stock price is all the way up here. And as long as it stays above the mark that we set, then we just make that 420 and we go about our day. But if the stock price were to drop down below our strike price, when we could see we start making less and less money. If we look at this expiration P&L number right up here, we make less and less and less money. And then our break even would be $21.16. And if the stock price were to continue dropping, then the contracts become worth less and less. However, we are fine with that because we were fine with buying the shares at the price that we selected. All right. And so let's assume that we'd been previously selling puts on SoFi and the stock price obviously dropped. And now it's time to do a covered call. And so for this example, let's assume that we were selling puts at, let's say, $27 and now it is $25. And so let's go back to the options chain. And now we're going to go with the exact same expiration that's 28 days out from now. And in the example I said, we were assigned shares at $27 and now it's $25. And so what you can do is, one, you need to determine what is more important to you when it comes to selling covered calls, right? Do you care more about the premium that you are receiving from the options contract? Or do you care more about the capital appreciation from the stock price going up? Or is it a combination of both? Now, for me, I care more about the guaranteed premium. And so I normally select a very aggressive strike price that is somewhere around my cost basis. And so if I were assigned shares at $27, then I would likely probably just come right over here to the $27 strike and sell a call here. And this is just me agreeing to sell those shares if the stock price were to rise above that $27 mark. Now we can see right here at the seller's ROI, I would get a 5.62% return on my invested cash. And that is an amazing return, especially in a span of just 28 days. All right. If we were to annualize this, then it would be over a 60% return on our invested cash. All right. But maybe you care more about the capital appreciation. Well, then you could come over here and you could, again, look at the expected move, and it says plus or minus $3.71, like we said before. And now you can add that amount to the stock price. And so that would put you somewhere around the $29 mark. And so if you wanted to actually keep the shares, then you would probably set a strike price of $29 or higher. And so let's assume we're going to go with the $30 strike, let's say. And so I'll go ahead and select that. And then I'll go ahead and add some shares to this trade. And we can see just with the 500 shares and the 5 covered calls that we could get a max gain of $2,615 if SoFi stock price were to go up to that $30 mark by our expiration date. All right. And so in this case, we are both receiving the options premium from selling the contract and also some capital appreciation from the stock price going up. And so for you personally, you have to determine which one that you care more about. Is it the capital appreciation or is it the guaranteed income from the options contract? But again, SoFi is an amazing company that I absolutely love using the wheel strategy on. And I am looking forward to potentially being assigned shares here very soon. But that's it for this video. Let me know in the comments below if you plan on using this strategy on SoFi or if you've already been doing it. And again, take advantage of the Black Friday sale. The link is below in the description. You'll get the code emailed to you immediately and you can come join us and trade to freedom. But I will see you guys on the next one. Peace.